Well, the air got sucked out of the room yesterday when it came to rates. Edward Boyd across it all as usual. Ed, good morning. So thankfully for mortgage holders and some businesses too, rates kept on hold yesterday. So can Australians with a mortgage start celebrating, or is it more just holding your breath for another month?
Pete, I think it's the latter of the two, unfortunately. I don't think it's time to pop the champagne bottles just yet. I reckon the Reserve Bank might have one more rate rise left in it. I mean, Governor Lowe yesterday, he did keep rates on hold, and that was the expectation. The markets were pricing in a hold yesterday, so they were kept flat at 3.6%, the first cash rate hold since April last year. We've had 10 in a row until yesterday. However, the governor in his statement did leave the door open, saying we're going to have to monitor the economy over the next few months, see how it's tracking, and there is the potential to tighten monetary policy further if needed. So I don't think we're at the end of the cycle just yet, Pete.
No, and as a mortgage holder, I wouldn't be popping the champagne until rates start dropping, Ed. So what would it take for the RBA to pause interest rates for good and perhaps then lead to cutting rates?
Well, we've got a quarterly inflation number coming out in 2 weeks' time, which the RBA is going to really look at closely. And they want to see inflation coming down a lot sharper than it is, because it's gone from 8.4% in December down to 6.8% in February. That's a pretty big drop, but it's not enough. So if that was to decline a lot further, I think we can say happily say it's the end of the interest rate cycle. Look, I spoke to an economist yesterday, Bessie Detta from St George Bank, and she thinks we'll see some cash rate cuts starting in February next year. So. We've got less than 12 months to go, Pete. It's still quite a long time, and a lot of people are being repriced off those fixed-rate mortgages now to higher levels, and they're obviously going to be feeling a pinch. And
I guess once you start cutting rates, I mean, does this feed into the housing market, Ed, where there's potentially another boom around the corner, because we've just seen the CoreLogic data come out suggesting that it's all on the way up again?
Absolutely right. As soon as we start to look, already we're starting to see the property market prices have turned. They're not falling anymore. They're slowly creeping ahead. There's a lot more confidence going back to the property market. People are putting houses up for sale again. One of the problems has been a huge lack of stock. But as sellers put more properties on, there's going to be fierce bidding. Prices are going to be going up. And next year we could definitely be going into a boom as rates get cut.
That's a worry for those who don't have a home or are trying to get one for sure. Ed,
definitely
appreciate that.
Affordability.
Thank you. Ed, thanks.